Did you know that while most people are just trying to survive the rising cost of living, the ultra-wealthy are quietly protecting, and even growing, their fortunes? While the middle class worries about gas prices, food costs, and interest rates, billionaires like Ray Dalio, Warren Buffett, and other financial giants are working behind the scenes, shielding their wealth from something many still don't understand: the currency and fiscal instability that can erode any fortune, including yours, if you don't know how to act. But here's the surprising part. Many of these strategies don't require millions to implement. What they require is vision, long-term thinking, and strategic action. And that's exactly what you're about to discover. How do you protect your money when the US dollar starts to lose value, global inflation rises, and governments become increasingly unpredictable? That's the question the world's top investors ask themselves every day. And unlike most people, they don't wait for the crisis to hit. They study the cycles, analyze the signals, and move early. The good news? You don't need to be a billionaire to think like one. In this video, we're going to show you exactly what these major players are doing right now, and how you can start applying these same strategies, even with limited capital. Before we dive into what they're buying, you need to understand how they think. Billionaire thinking is not reactive, it's strategic. Ray Dalio built his empire by predicting economic cycles and studying how systems collapse. Buffett, famous for his patience and focus on intrinsic value, repeats a simple principle: invest when others are fearful. They track indicators: inflation, fiscal policy, interest rates, public debt, and respond based on data, not headlines. They know that moments of uncertainty hide rare opportunities, and that true security doesn't come from avoiding risk, but from being prepared for it. The first strategy used by the ultra-rich is international diversification. They don't keep all their wealth tied to a single currency or country. When the US dollar shows signs of devaluation, due to excessive printing, mounting debt, or declining global confidence, these investors are already positioned in global assets. Ray Dalio, for example, has been investing in emerging markets, gold and Asian economies for years. The concept is simple. Don't put all your economic eggs in one basket. And how does this apply to you? Today, with a digital brokerage account, you can access global ETFs, invest in indexes from Europe, Asia, or growing markets, all with small amounts and low barriers. You gain exposure to different currencies, different economies, and significantly, reduce your local vulnerability. The second strategy is as old as money itself: investing in real assets. In times of currency crisis, what holds value are assets with intrinsic worth: gold, real estate, land, and commodities. Warren Buffett has increased his exposure to energy and infrastructure companies for precisely this reason. They offer resilience in turbulent times. Gold, for example, has been used for centuries as a hedge against currency debasement. But you don't need to buy physical bars to tap into this protection. You can invest in precious metal ETFs, real estate funds, or even fractional shares of companies operating in the resource sector. The key point is this: allocate part of your capital to assets that don't rely on government promises or central bank policies. The third, and perhaps most visionary strategy of billionaires, is investing in innovative, asymmetric return assets. This means putting a small portion of capital into assets with high upside potential and manageable risk. This includes emerging technologies like artificial intelligence, blockchain, clean energy, and disruptive startups. Michael Saylor from MicroStrategy invested billions in Bitcoin as a store of value. Cathie Wood went all in on fast-growing tech companies through her ARK Invest funds. The logic is clear. Not every bet has to win, but it only takes one to explode and offset all the others. And for everyday investors, this can be accessed through fractional crypto investing, tech stocks via apps, or innovation-focused ETFs. With as little as $20 to $50 a month, you can play this game too. So what do all these strategies have in common? The answer lies in long-term vision, diversification, and proactive positioning. None of these billionaires are trying to guess what's happening tomorrow. They're preparing today for what could come in 5, 10, or 20 years. They don't get distracted by short-term noise, media panic, or trending hype. They study fundamentals, choose strong assets, and build protection intelligently. And you can, and should, do the same. Because real financial security doesn't come from avoiding risk, but from learning how to navigate it strategically. Now you might be asking, okay, but how do I apply all of this with limited funds? Here's a simple 3-step plan. First, open an account with a broker that offers access to global and fractional assets. Second, divide your capital like this: 60% in global assets, like international ETFs, 30% in real assets, like REITs, gold or commodities, and 10% in innovation and asymmetric growth assets, like crypto or emerging tech. Third, stay consistent. Invest every month, even with small amounts, and track your progress with patience. This won't just protect your money, it'll build real, long-term wealth using the same logic the rich have relied on for decades. So, now I ask you, which of these strategies are you going to start using today? Will you keep waiting for the market to get better? Or will you take control of your financial security like the billionaires already have? Drop a comment below telling me which tactic you found most powerful. And if you want more videos on how to invest with long-term vision and real strategy, subscribe to the channel. Here you'll learn how to think like the big players, even without a big fortune. Because those who act strategically never rely on luck. I'll see you in the next video.